You believe that having a strategy alone is going to make you a successful trader. But unfortunately, that is not the case. No matter how good your strategy is, if you're against the trend or you're against the market, you're always going to lose. So in this video today, I'm going to show you exactly how I'm able to identify the daily bias and understand the direction of the markets and where the market is heading towards. And by the end of this video, you should be able to do the exact same. So let's go ahead and show you how it's done. So as you can see in the markets, the first thing that I like to do is I like to identify the trend. What direction are we going in? Are we going towards the upside or are we going towards the downside? And this is where most traders fail at. Most traders will believe we're on an uptrend or believe we're in a downtrend, but reality is there has been a market shift in the current time frame and they end up going against the market. So before we actually look at the charts, I need to show you what is an uptrend and what is a downtrend, okay? And what makes an uptrend and what makes a downtrend. So as you can see, I'm drawing up two levels or two trends at the moment. One, this side is an uptrend, this side is a downtrend. But the problem is we all will know that if the market is going up, it's going up. If the market's going down, it's going down. But what causes an uptrend and what causes a downtrend? And so for the markets, what I like to do is I like to create a low and a high, or a high or a low. I like to mark it out, and then we see the next low or high, okay? And in this case, we have a low, and you can see this low is higher than this low right here. So we would call this a higher low. And then we continue, and we can see over here as well, we have now created a new high. It's higher than this high, and we call this a higher high. And you can see that it keeps happening. A higher low, a higher high, a higher low, and a higher high. And when this happens, this shows us that we are on an uptrend. And so on the reverse, it will be the opposite. So on the downtrend, we will see a high and a low. And once we create a high and a low, we can then see, okay, what's happening next? Well, we can see that we created a high, but it's lower than the previous high. And so this would then be a lower high. And then we go down and we then see that price has now created a new low, which is lower than this, which is called a lower low. And you can see it keeps doing that. Lower high, lower low, lower high, lower low. Okay, and this is practically the two ways that the market goes in. And especially when you're looking at the daily bias, I personally say that there's only two directions. Now, I know most traders will say, okay, yes, but there are consolidations and ranges. But when you're on a higher time frame, you're going to notice that we barely have ranges and we barely have consolidations. But if you do, by any chance, get to a level where you see on a higher time frame that the market is consolidating or ranging or is not really moving anywhere, best case scenario is just don't trade. Just wait for a move to either the upside or to downside. And that's one of the key red flags when it comes to trading is most traders will think that we should trade every single day. But the thing is, you don't actually have to trade every single day. If the market is not giving you a clear direction, if this step you can't see, then don't bother trading for the day. So if we look at the markets, okay, first of all, what time frame do we use? Now, when I started off as a trader, I did use the daily time frame for obviously to find out what the daily bias is or what the market is going through. And I noticed that the daily time frame gives me good information. However, something about the 4-hour time frame is just a very, very clear indication. But what I like to do is I like to start off on a higher time frame. Because if we start on a lower time frame, you'll see that a lot of trends get disrespected and we can't actually identify a strong trend. However, on the higher time frames, we get to identify what the trend is, and it's much stronger than what it would be on a lower time frame. So if you're currently a day trader, a scalper, a swing trader, well, swing traders would use much higher time frames, but for day traders or intraday traders or scalpers, you guys need to still identify the daily time frames, the 4-hour time frames, the weekly time frames to understand the bias and set targets. So for me, what I like to do is I will start off with a daily, or sometimes I'll start off with a weekly to understand what's actually happening in the market. So let's start off on the weekly, okay? And we can see on the weekly, we are going down. We have pushed to the downside. And so let's identify highs and lows. I think that's the best course of action to do when you see this kind of move. So let's get our highlighter tool out, and we can see straight away we created a high and then a low right here, and then a lower high right here, and then a lower low, and then a lower high, and then a lower low, and then right now we are creating a lower high, and now we have created equal lows. Okay, so when we see equal lows or price has created a new higher low, right, most likely price is going to shift and is going to go towards the upside. Okay, in this case, because we're on a downtrend, it's going to go on the upside. If it was a reverse, it would go on an uptrend and it will reverse to the downtrend. So straight away, I can see that market is on a downtrend overall on the weekly, but now I need to identify that what happened over here, or why did these price do not break and create a new low? We actually ended up creating equal lows, so therefore maybe price could potentially go to the upside. And remember, I made it very, very clear it's a maybe. It's not a 100% it is going to the upside. It is a maybe. Remember, we can't predict what that market is doing. We just have to go based on what the market is doing currently. What feedback we get from the market is how we would react. We don't predict, we react. And so looking at the market, I can see we had a huge reaction to the upside, and it looks like we are trying to top off these highs right here. So let's go on to the daily and really see what's happening. And so as you can see, we had this downtrend, but now look what happens. We created equal lows, okay? And then we created a high, low, and then we created a lower high and a higher low. Okay, so now this right here is very, very significant to us because price has now created a shift in the market. Okay, but it is not confirmed yet. Just because we have created a new higher low does not mean that we are going towards the upside just yet. What we need to wait and see is if market will break this high right here. And as you can see, market ends up breaking this high right here, and it's a clear body to the upside. So when we identify breakout structures, we need to understand that breakout structures only occur, we cannot count wicks. It has to be a body above the previous high. It has to be a body closure. If it's a wick, I personally don't count it, but if it's a body, it's amazing. So right here, I can see we had that breakout structure body push to the upside. So most likely now, where do you think we'll be targeting? Well, we will be targeting the next high. So in this case, the next high is all the way up here. And as you can see, market has not actually tapped these highs. So now what we're doing is we've seen the weekly. We know the weekly is bearish, but we had equal lows and price had an impulse to the upside. So most likely we could be having a change of character or shift in the markets or a breakout structure on a lower time frame. The daily time frame, we see that we had a breakout structure already. A breakout structure has occurred and it's a clear body to the upside. And not only that, we actually have, and I'm just going to clear this for you, we actually have market push to the downside, creating a high and a low. We created lower highs, and then we created a higher low. This is very significant. And then not only did we create a higher low, we then had a break of structure. So this right here tells me we have changed trends. We're no longer on a downtrend. We're most likely going to push to the upside. So most of you that are looking at this market may be thinking, okay, so what if the market goes down? Well, if the market goes down, most likely it's a retracement, and we're going to still continue to believe that the market will be just creating higher lows, higher highs, higher lows, higher highs. Okay, so the market potentially could look like this, creating higher lows, higher highs, higher lows, higher highs. But again, this is just a thought, and we have to wait for the market to give us clear signals. But the clearest signal that we have within this market right here, which is Euro USD on the daily time frame, is we had a break of structure, body above. We created market structure, which is a high, low, lower high, higher high. That is very important. And we had a big, massive impulse to the upside. So most likely we are targeting these highs right here. So we go into the 4 hours now. and you can now see more information. As you can see, we started on the highest time frame, which is the weekly. The weekly gave us a little bit of information. The daily then gave us a little bit more information, and then you go to the 4 hours and you get even more information. Remember, right now we're just trying to build up a lot of information to give us what our bias is. But at the moment, our bias is bullish. Even though yes, we were on a downwards push, but at the moment we have shifted into a bullish move. Okay, and so that's where most traders fail at, is because they see, oh, the higher time frame is bearish, so most likely on a lower time frame we're going to be bearish. But if you have a look, the higher time frame did show us a little bit of a bearish move. We had a shift, and that shift is very, very significant. And so now you can see right here on the 4 hours, we get a little bit more information and you can see more structure. So now you can see that this level right here, these lows, looks like we're trying to sweep all these highs. And so you can see the last high that got swept was this high right here. And then we also swept this high and there's a body above. But as you can see, the last candlestick is bearish. So what do we think the market is going to do? Well, if you're on a bullish move, what we like to see is, what we like to enter is either at fair value gaps or imbalances or order blocks, or it sweeps a low. Okay, so as you can see right now, we created more structure. There is more structure in the markets because now look, we created a high and a low right here, then we created a lower high, and then we created a higher low. Okay, and then we created a higher high. So this is where really the shift of the market happened. This is where we really find out this is the shift right here. So this is really where we get that shift in the market. We had that breaker structure to push the market to the upside. And then you can see it just keeps happening. We then keep seeing, we then have obviously a little bit of structure right here. Then we create, so this is a lower high, sorry, a higher low, and then a higher high, higher low, higher high, higher low, higher high, higher low, higher highs, higher low, higher high. And we've already right now, currently, we're at a higher high. So most likely right now, what do you think we are doing? We are creating a new higher lows. Okay, so now what I am trying to look for is we're going to now scale it and see where potentially the market could be going to. Okay, but at the moment, what I have identified is the weekly time frame. We had equal lows and impulsive move to the upside. Then on the daily, we have price breaker structure and shift in the market. So we are bullish. And bullish is just another word to say that we are most likely looking for buys and we're on an uptrend. And then on the 4 hour, we clearly see that we are currently going through a retracement and price is creating a new higher low. Okay, this is what we have taken out of the market. So now that I know that we are over on the uptrend, we are now creating a new higher low. So most likely I'm going to look for entries into the market. So this is where we then go into a lower time frame, for example, the hour or the 30 or the 15-minute, and really look for potential entry points. So for me, I like to start off on the hour and really see what the market is giving. So I'm just going to delete these highlighters to really see what the market's giving us. And straight away, you can see that in the high time frame, we're actually looking like we have just had another shift in the market where price has created a high, created a low, created a lower high, created a higher high, and then created a lower high. And now we have just pushed and broke structure. So this right here, people think, oh, it's broke of structure. We are going down now. Let's all scale to the downside and let's just all push the market to go down. But look at what the actual general direction of the market is. The market is going towards the upside. Okay. And so what are we identifying now? Once we get the daily bias, once we understand that what's actually happening in the markets, we see this uptrend. What are we locating now? For me personally, I'm locating fair value gaps. I'm looking for liquidity sweeps. I am looking for order block tap in. And we can see that we have currently a fair value gap right here. And currently we have just tapped into this fair value gap. Not only that, we have liquidity lows right here. Okay. And we have this order block right here. If I just mark it up, an order block right here. So I have these three levels, and you can see most of them overlap with this. So this one overlaps with the fair value gap. So I won't mess up my charts too much. I'll probably just keep this right here. And so now what I'm doing is I'm just going to wait and see how the market reacts. If the market just pushes right through this fair value gap, we know that most likely we might get a sweep of liquidity and then push to the upside. So these lows right here. Or what could happen is we could just instantly see a push to the upside from this fair value gap, from this imbalance in the market, this gap in the market where this imbalance needs to get filled. And you can see this fair value gap needs to get filled, and we could potentially then see price impulsively push to the upside. And so this is exactly how you identify exactly what's happening. And then once you've got this, you can scale into a lower time frame, really understand what's happening, and potentially look for entries on the 15 minutes and the 5 minutes. But do you understand now how we scaled from the higher time frame all the way to the potentially the 1 hour, the 50 minutes, and we've overlapped everything. On the weekly, we understood what is the feedback the market is giving us. Are we on an uptrend? Are we on a downtrend? Then we use the daily / 4 hours to really understand that daily bias, really understand what's actually happening in the markets. Are we creating higher lows, higher highs, or lower lows, lower highs? Do we have that shift in the market? Have we changed directions? If we have not changed directions and we're going to the downside, continue to stick with the trend. Remember, guys, trend is your friend. Okay, if trend is your friend, never ever trade against the market. If the market is going up, don't look for sells. If the market is going down, don't look for buys. And I've failed to do that multiple times where especially as a beginner, I would look for the market. I'll see, okay, we're going up, but at the moment we're going down. And I'll think, okay, let me go for a sell, get a cheeky little sell and see if I can make a lot of profits. And what happens, the price just reverses on me and I end up getting stopped out and getting losses. So once you understand the direction of the market, you can then scale in to the lower time frames and really get the entries. So as you can see, we started off on the higher time frames, understood direction, understood trends. Once we got to like the 4 hours and the 1 hour, we can really understand liquidity lows, fair value gaps, and really then scale into the lower time frame, like the 15 minutes and 5 minutes, and get a nice entry. Mixing it all together, putting all the time frames together like a puzzle will help you understand the markets. And once you have trained your eyes to keep doing this and you practice and practice and practice, you will then understand that the market itself isn't very hard to read, and you'll be able to always be on the right side of the markets. And most of the times I always tell my members of the Wealth Club as well, I always tell them that I'd rather you have a trade where you just didn't get the direction at all than a trade where you knew the direction and you just had an error on a stop loss or take profit. I'd rather that. I'd rather you have a mistake on the stop loss or take profit, but as long as you get the direction, you should be good. And so for you all as well, I will say this one thing. Make sure you specifically understand the direction of the market rather than trying to always get entries, because entries are amazing, right? Once you get the right entry strategy, it's amazing. But if you don't know the direction of the market, the entries itself is pointless and it's a waste of time. So if you don't want to waste your time, practice on understanding the daily time frame, understanding the bias, understanding market structure, understanding the direction of the markets. You don't need to, especially on a higher time frame, you don't need to look at all of this structure and say, okay, high lows, high highs, high lows, high highs. And most traders, if you struggle to understand this, best thing to do is go onto this toolbar right here and click online and really have a look at what the market's creating. Sometimes I do this where I'm on a high time frame and I just see, okay, we're on a high here, we created lows right here, but then it just swept those lows. Then we pushed down for more lows, and then we created a new lower high. boom, low, and then boom, push, breaking this structure right here. And so then when you understand that, you can then go on to candles. So if you are struggling, try and use the different tools that the market has for you. For example, line charts. Line charts are very, very simple. Most of us grew up in school where we draw line graphs. We don't draw candlestick graphs, so we might not understand this. And so using line graphs as well can really help you identify the market. So looking at Euro USD, when we scale in, we already know the direction of the market. We're going on uptrend right now. We're on a retracement. So we're not going to change our bias just because the lower time frame had a break of structure. We're not about to change our bias and say we are selling. We have to follow what the higher time frame gives us. So I would always stop at the 4 hours to look for change of characters or change of directions. I would always stop at the 4 hours. I won't go lower to see those things, because on the lower time frames, most of the time it will get disrespected. It will be a thing where the market will potentially show you that it's breaking structure and it's showing you that we are going down, but you can then see that reality is it's just a retracement, and we have this already, we have this target up here which needs to be met. Okay, so I hope you understand now how to identify the daily bias. If you understood, make sure you like this video, comment down below if this video helped you and what you found insightful from this video. And if you would like to see more videos, make sure you subscribe and check out my channel. I have a lot of insights to the markets and how you can improve your trading journey. And also, if you would like to be part of a Mola FX Wealth Club, make sure you click the link in the description below. I trade live in front of all of you and the Discord server on a live stream, and we trade live. All my profits, all my losses are all documented live in front of you. So there's no fakes, or everything's transparent for you as well. So something that you can use and actually improve from as well. If you would like to be part of that, make sure you click the link in the description below. But other than that, I hope you'd enjoy this video, and I'll see you all in the next video.